For charting futures today, we are going to take a look at yields, and we're also going to take a look at the influence of falling yields on other asset classes, including gold futures. But first, let's take a look at that 10-year yield over the last 6 months, because this is really pretty stunning. Take a look at that, down 71 basis points. And everybody's wondering what's the big cause here. Now, last year, when the Fed was still in hiking mode, we had this big big fall of yields down about 30 or 40 basis points, suggesting that piece of it at least was on global growth slowing fears. And then this year, we have another 30 basis points down. It's unclear as to whether or not that is more the Fed or growth fears. But when we take a look at the dollar, because if this was just the Fed, you would think the dollar was lower. But take a look at this one-year chart of the dollar. It is just up and away in this trading range, a trading envelope. This is a bullish pattern here because the lows are higher. Ultimately, this chart suggests you could see the dollar index break above 100. If that happens, that's not consistent perhaps with yields falling just on dovish monetary policy. It may suggest that there are global growth fears. To talk more about this now, Joe Perry of Forex Analytix. Hi, Joe. How are you doing?
Good.
So what do you think about that dollar and yields? How do you tie that together?
Yeah, I happen to agree with you about that dollar chart. It does look like it's going to break out, but I think it's one of those things where the dollar is kind of the best of the worst currency. So the dollar is going to go higher, where you're going to see the other major currencies fall, just because their data is so much worse than the U.S. data. Although we do have GDP coming up tomorrow, and we have CPI on Friday, so we'll have to see what happens there.
Okay, so you're saying that if the dollar does rise, it doesn't mean that it's all just global growth fears. But if the dollar does rise, it should be bearish for gold. And you have a chart here. This is near term, so I will make that point.
Okay.
But a really interesting trade here on gold futures.
Right. So if we take a look here, you can see that we've been rising here since last year. We've been in an upward channel, and we had 3 highs put in, while our RSI actually had put in 3 lows. I'm sorry, 3 lower highs. So that was actually indicating that we were going to break lower, and it did break lower, as a matter of fact. And we retraced 50% of the level from back here in November up to the recent high. Now, we kind of look at the 61.8 retracement level, the 50% retracement level, and the 38.2% retracement level as traders. And here you can see we retraced right up here to the 68.2% retracement level from this high down to this low. And if you take this flag pattern that is forming right now, here you have a handle. Here's your flag. You add that to the bottom, and it comes down around 1260. So that's the point that I'm targeting. However, over the longer term, I think that gold is going to move higher. This is just a short-term trade looking at perhaps a month or so.
That's interesting. So it'll be even more interesting to watch what the dollar does over that time period. But, we should mention you traded futures for nearly 2 decades with 0.72. So let's take a look at some of the reasons why you would trade gold futures over, possibly other vehicles.
Sure. Well, the first one is because you get to control 100 troy ounces per contract. So you have that, and that's one of the reasons that you get to use that is because you don't actually have to own the physical bullion. You get to control it in the futures market. The other one is that it's very liquid, especially in the front months. The hedgers and the producers and the commercial end users primarily use the back months for hedging, but all of the liquidities of the front month, that's where all the action is. And as I said before, it's a great alternative to holding the physical gold.
Great stuff. Joe Perry, Forex Analytix, bearish on gold in the near term, bullish in the long term, and many reasons why to trade those gold futures. Thank you for joining us for Charting Futures. Scarlett and Caroline, back to you. Abigail.